Welcome to Retire Right, a forum to discuss all things retirement. This webinar has been organized by Outlook Money in association with HDFC Pension Fund Management. I'm Nidhi Sinha, editor Outlook Money, and we have with us today Sriram Iyer, Managing Director and CEO of HDFC Pension Fund Management, who will shed light on a very important retirement tool, the National Pension System, as well as discuss the ins and outs of the pension management in the country. Let's dive into the discussion straight away with Sriram. Welcome, Sriram, to this show, and thank you so much for being here to solve all NPS related queries of our readers.
Entirely a pleasure to be with you.
So the first question to you is, we all know that the number of senior citizens in India is projected to grow in the coming years. Do you think India is ready to tackle that situation, that population burst?
Good, very, very important question. And I think that's a great starter question. I think the way we are all very obsessed with this whole demographic dividend that we have been reaping now for the last few years, which I think is great. I think India is in that sweet spot where, a very large number of our population, a very large number of people in our population are below the age of 35, 25, whatever. That's the number that most people know, right? The median age is 29. Most people know that. Very few people know that even today, one in roughly 12 to 13 people in India are above the age of 60. That number is going to explode, right? So by 2050 or 2047, when we complete 100 years of independence, one in every five Indians is going to be above the age of 60. Now, that's a scary number, right? And that's a number that is scary because of multiple reasons. Because of the fact that it has implications not just on the fiscal situation of the country and the kind of implications on the fiscal as well as on the social dimension. So there are multiple dimensions that actually can get impacted if we not address this, in some sense, this change, the significant demographic change that's going to happen in the next 25 years adequately. The good news is that, and I think the reality is that India is growing older than it is growing richer, right? The good thing is that we have demography on our side. We have time on our side, which means that we have adequate number of years for us to really steer the ship in such a manner that it doesn't sort of go and hit the iceberg of an aged population, which some of the other developed countries have. We've seen enough instances of developed economies which have they're really grappling with the situation and have a much larger old population, which doesn't really add to the economy, add to the GDP, and is to be funded by the much smaller younger populations. I think, but so to simple answer to your question, the answer is no. I don't think we're adequately prepared, but I think we're very well positioned to address this.
Yeah, so like you said, we're not adequately prepared, but at the same time, we have enough time to kind of address that problem. So in that scenario, what kind of policy initiatives you think can come in and help drive retirement readiness among Indians, which is very low, by the way, right now?
Yeah. So if you look at the overall number of individuals covered by some form of pension plan, be it through NPS. So if you look at the entire government employee space, which roughly is around 1.5 odd crore employees of the government sector who are covered by NPS. Then there is the around 80 odd lakh people or 75 odd lakh NPS subscribers in the non-government space. So that makes it around 1.8 plus 70 is roughly 2.5 crores. And then there is the 7 odd crore individuals who are there in the employee provident fund scheme. So that's the total number of people that are in some sense covered. Now we are not even getting into things like adequacy because there is also the Atal Pension Yojana where there is 7.5 crores who are there, right? And there will obviously be some overlap across all of these universes, right? But the point is that that's the current coverage. And the current coverage, if I were to look at the non-government space, is abysmally low, right? And I've been saying this, making this case for a very long period of time, that in the non-government space, there is a lot more that needs to be done in the form of various types of interventions. And I wouldn't really necessarily call it policy level interventions. Of course, some level of policy interventions will help us. For instance, one of the things that the government, and in fact, the Honorable FM announced in the last budget speech about creating one nodal entity that will oversee all pension products. I think that's a welcome move. In fact, it was one of the recommendations that we had made in the pre-budget consultations. as the industry, as an industry body, we are represented to the Honorable FM's office that there should be uniformity in the way pension products are structured. If you look at the pension ecosystem today, there are pension products offered by insurance companies. There are retirement plans and pension plans. Retirement plans, not more than pension plans, offered by the mutual fund segment, and then there is the NPS, and then there are numerous other options that are available. I think it is important for us to make sure that at the end of the day, the beneficiary, which is the Indian who is sort of expected to sort of save for retirement, doesn't end up with a confused situation. Currently, if you ask an individual as to what's the difference between or what are the benefits of each of these, they wouldn't be able to answer that very clearly, right? Because of the fact that there is just a plethora of options that are available. These are 4 or 5 that we just spoke about. It ends up confusing the hell out of people, right? So I think it is important for us to therefore create a harmonization of pension products, not just in the form of a common framework, but more in the form of what are the kind of benefits that are offered. They have to be in the same ballpark. It has to be in the same sort of broad contours. Taxation, it has to be similar, or at least they have to sort of align to a common kind of a tax advantage framework, and so on and so forth. So I think there is merit in doing that. Good news is that the government has already acted on it. In fact, I saw a circular just last week announcing the formation of a committee to examine how you can sort of create some form of a common framework for pension products, because that's an important element that we need to address. That's number one. Number two, now if you look at a pension account, or a permanent retirement account number, as an NPS account is called, it is as basic as a bank account, right? And that's the way we will need to start treating it, right? I mean, this is not a luxury, and for not for a moment am I suggesting that investment in mutual funds and insurance is luxury. I understand that people end up opening a mutual fund and insurance relationship once they have surpluses. As far as pension plans are concerned, I think it almost has to be mandatory for an individual to have a permanent retirement account number. Therefore, if at the time of account opening, and by the way, for opening a PRAN number, or for opening an NPS account, or having a PRAN, all you need is a KYC, right? It's the same KYC framework that is used for opening a bank account, right? So, can we explore ways to actually automate or make a PRAN a default? Every time a bank account is opened, or every time a financial product is being purchased by an individual where KYC is being offered by them, or the KYC is being submitted by them, the PRAN should almost become an automatic add-on, to that relationship. By doing that, what we will ensure is that every single Indian, like we have seen enormous success with Jan Dhan Yojana, right? I mean, the whole banking system has undergone a transformation, and the whole DBT system that's sort of, and therefore leakage, reduction in leakages, and so on. So the benefits are humongous, right? Similarly, if you're able to learn from that, fantastic initiative that was taken, and make sure that every single Indian has a PRAN number or has a retirement account number, I think that's the first step. So that's the second point. The third point is, if you look at the Indian diaspora globally, right? I mean, there are a large number of Indians, specifically in Middle East, because you do see most of the people who work in Middle East tend to come back to India at the time of retirement, right? Post-retirement, post their work, or after working for a certain finite number of years, they do choose to come back. While today NPS can be opened by a non-resident Indian, the process for that is not as straightforward as it needs to be, because the person is sitting in a foreign locale. The whole KYC process is slightly more tricky, because the individual needs to be, you can't do a video KYC, for instance, right? If the person is sitting in a foreign location. The government is looking at it. In fact, we've had conversations with the Department of Financial Services on this, highlighted the issue, not just the NPS industry, but even other industries, right? Those struggle with providing services to the Indians who are not in India, who are sort of globally, or in some sense global citizens, but intend to come back to India. So I think these are three things that, and which will help us to sort of address some of the core challenges that we are likely to face as time progresses. One final point, specifically to corporate NPS subscribers, which are salaried employees. I think every single corporate, in my opinion, and I have made a very strong case for this in numerous forums, about making NPS an opt-out instead of an opt-in, right? Because the moment you're able to enable every single employee with an NPS account, All it takes for the individual to do is to start contribution, even to the extent of 500 rupees a month is fine, right? But that first step will need to be, that catalyst will have to be the corporate. The HR and the corporate will need to own this task of making it an opt-out. We've all learned from examples of organ donations globally, right? When it was opt-in, opt-in ratio was around 8-10%. When it was opt-out, it was almost 90%, right? So there are some very, very good learnings that we can pick up from other sectors, other industries, and implement it here. And I think these are some of the things that I think we will need to. And these are not necessarily everything doesn't rest with the government. I think the responsibility is on all of us as Indians. Of course, the government can play an enabling role, as can play the role of a catalyst, but I think all of us have a responsibility to make sure that we're able to get Indians to be retirement ready.
Those were, of course, some of some very interesting ideas that you put forth. In fact, corporate NPS is something that I personally also have been worried about, in the sense that the reach is not that much. NPS is right now primarily for government employees, not for government employees, but being opted by government employees. In fact, with the new UPS versus NPS, all the debate, etc., sometimes tends to veer towards that. But in terms of corporate, of course, opt out is something that you definitely suggested, and that's a good idea, because we've seen that with the tax regimes also. The moment the new tax regime becomes opt out, I think the game changes.
Absolutely, absolutely. I just want to add one more point, if I may,
Yeah.
Nidhi, which is the point around. So if you look at I think we need to acknowledge the fact that corporates have started waking up to this reality. And there's a lot of groundswell of opinion from employees. And in fact, we see the maximum amount of adoption incidentally in the non-government spaces amongst PSUs. In fact, if you look at the public sector undertakings, practically every PSU, except barring a couple of them, have adopted NPS, right? And that's happened because of this very strong opinion from people within the organization. And the same is happening in private sector as well. And we've had enough examples of corporates taking the onus and the initiative, not just the onus and initiative of onboarding onto the corporate NPS platform, but also working with the point of presence to drive adoption. And we've seen some exceptional examples, right? I mean, there are companies in some of the cities that we operate in, pretty much in all the large cities we do operate in. There are corporates where it is voluntary, but the adoption rate is 75-80%, right? So
That's
it can be a game changer. I mean, if the HR folks and the competent folks in corporates put their mind to it, they can create magic.
okay. Hope that that really takes forward and goes forward in that direction. But you also mentioned that there are several products right now in the market when it comes to pension. Mutual funds are doing it. Insurance policies are doing it. People are making their own pension funds through mutual funds or other assets. So,
Yeah.
what is that one thing that kind of differentiates national pension system, according to you?
Actually, a multitude of things. But I think the biggest standout feature, as far as this, and I would say it's a combination of features, of course. But if you were to look at any person's retirement savings journey, typically, if you start at the right time, which I think should be from the day you start getting your first source of income, could be a salary, could be through through whatever sources one is able to generate income, setting aside a certain amount of money into a market linked product and not having the option of exiting that product till the time that you hit 60 is by far the biggest. Now, one could argue that, cost, flexibility, of course, all of those things are there. And we can get into, why it is one of the most flexible financial products that is there out there in the market, right? But in my opinion, the single most powerful feature is the fact that getting into this product, if you get into this product at any point of time, preferably the earlier the better, the investment return and the investor return are the same, right? So if HDFC Pension Fund Management since inception, and we've been around since August 2013, and we completed 12 years last month, the since inception return on equity is 14.75% per annum. So somebody who opened there and started investing in equity tier, I'm talking about equity tier one, had an allocation to equity tier one and had been, consistently contributing towards it. On the first tranche, they would have seen 14.75% because, there are very few exit options available from NPS. So in my opinion, the fact, and this is, more often than not, I hear individuals complaining about the fact that there is no liquidity. But I think that's where the power of this product is, right? Not having liquidity, make sure that you will make exceptionally high returns. Of course, you need to make the right kind of asset allocation, you need to contribute regularly, and so on and so forth. But the reality is that if you do all of those things, right, you will end up being very, very surprised, positively surprised with the kind of returns that this product, the kind of corpus that this product has created for you. Of course, then there is a cost angle, which we all, of course, I think this is very well known. This is the lowest cost actively managed fund, I think arguably anywhere across the globe. In India, of course, clearly, because we charge between 0.03 and 0.09%, depending upon the size of the assets under management that the pension fund manages. And of course, if you add the allied costs that are there, it still works out to less than 15 basis points for somebody who's investing over a 20-year time horizon, right? So I think it's a very low cost product. It's important to therefore, have a vehicle where cost is not eating into your kitty, right? So that's that, of course. So the cost keeps coming up. And then look at the plethora of flexibilities that are available in this product, right? I mean, there are 10 pension fund managers. Each pension fund manager has a style, while the broader, architecture is defined by the regulator PFRDA. But each pension fund manager has a style, right? So you can benefit from style of different pension fund managers. You can have a different pension fund manager for your equity component, different for your corporate bond part of your portfolio, and different one for your government securities part of your portfolio. You can move across these 4 times in a year. You can change asset allocation 4 times in a year. Zero cost, zero tax, right? You can change your pension fund manager once a year. So I'm saying I can go on and on and on about the kind of flexibility that's available. But I think the point that I started with, which is the fact that this product doesn't allow you to get out till the time that you actually need the money, which is at the time of superannuation, will actually surprise you. The kind of money that you can accumulate through this vehicle can really surprise you, right? And that's something that I would really urge your audience, your listeners, your viewers, subscribers to really sort of think very deeply about.
That also kind of goes with the whole concept of equity, where we always say, and the advisors always say, that you need to be invested in for the long term, and you need to be
Absolutely.
patient, etc., etc. But also, given the equity culture that has increased in India, do you think that if NPS goes up on equity in terms of the flexibility, because 75%, of course, the tier two has a different rules. If the equity portion, the flexibility on the equity portion is increased, do you think that will make it more attractive? Or at the same time, NPS has a certain philosophy that it wants to do an asset allocation age wise. So what is the perfect balance?
So I think you need to examine data. And if I were to look at the data of the broadly, I mean, and this may not necessarily be exactly accurate, but if you look at the number of people that have really chosen active choice, have actually gone in for active choice and have maxed out on their equity allocation of 75%, the number would not be more than 12 to 15%. And this is basis my own analysis. I could be off by a few percentage points here and there. But I think the point that I'm trying to make is that there is a very large number of individuals today who would have an NPS account, but they seem to think that opening the NPS account and contributing to that is enough. They don't take sufficient interest in actually looking at whether they are with the right pension fund manager. And I think all 10 pension fund managers come with their own strength. And I think all of them come with solid credibility. All of them come with solid backing. But it has to align with you have to be comfortable with the pension fund managers. So one number is pension fund managers. So most people don't know who their pension fund manager is. Number two, what is the asset allocation? More importantly, right? More often than not, what we see is that most of them have actually chosen what is called as LC50, right? The life cycle 50 fund, where allocation to the extent of 50% happens in equity till the age of 35, after which it starts tapering down from 50 to 10% at the age of 55. So I think the current flexibility of 75% in equity itself is not being utilized, right? While will it be great to it will be good to have, let's say, 90% allocation to equity, allow people to invest up to 90%, of course, right? More flexibility is always great. But I think even the current 75%, I think, can be, sort of leveraged, utilized. People should take more interest in the way their asset allocation is. That job doesn't end with just opening the NPS account, but making sure that they take interest in what is the asset allocation, depending upon their risk appetite, depending upon the amount of time that they have for retirement. They need to make sure that they are making the adequate allocation to equity so that so that they're doing justice to the corpus that they're putting aside during their working years.
Right, that's very interesting. And actually, it raises the point about awareness also, because if people are not utilizing the whole 75% equity, that flexibility, despite that being there. But that's another point, of course. You were talking about low cost also. Again, I don't know how much the awareness is about the fact that NPS is the lowest cost product right now. Does that also have an effect on the returns? I'm sure it does have, but how do we kind of take it out there and tell the investors about that?
Interesting. So I think that's exactly where I think pension fund managers and points of presence end up spending a lot of time trying to communicate the impact of some of these things to the end subscriber. Let me give you an example, right? So a cost differential of up to 1%, which is in most cases, right? In case of NPS, it's even if you add the other costs, it's 15 basis points, maybe 18 basis points, maybe 20 basis points, right? For every 1% that you save during the course of your per annum that you save during the course of your investing journey, the terminal value can be higher by 25 to 30%. I can say this till the cows come home, but can I convert this into a narrative which is a lot more compelling, right? I'll give you an example of how we've tried to do it, right? And I'll give you an example of what we did on the cost of delay, right? And I think I don't know if I've spoken to you about this earlier, but that's the other thing, right? So one is, of course, the fact that by saving 1%, you can actually add close to 20-25%. Of course, it's a function of the number of years, it's a function of the percentage compounding rate, and so on and so forth. But broadly, the impact can be 15 to 25%, right? That's a significantly large impact. Similarly, how much time you're giving this product also has a significantly large impact, right? You started 25 versus you started 35. The way we tell subscribers that we say for every day that you're delaying investing in this product beyond the age of 25, you're losing 3,260 rupees. Now, does that ring a bell, right? It does ring a bell if I say it in this way rather than saying, you should start early. You'll say, I'll start early. Okay, everybody tells me, what's the big deal, right? So because of the fact that we are all very loss averse, right? In some sense, we the pain of loss is significantly higher than the pleasure from a gain, as some of the famous behavioral economists taught us. How do you use some of these to drive home the message that you should not delay? You should try and minimize the amount of cost leakages and so on and so forth. So the whole focus is on making sure that we're able to communicate these things in a manner which resonates with people. Otherwise, it will fall on deaf ears because people have heard enough about the power of compounding, about the cost of delay and so on. I mean, about why you should start early and so on and so forth. But I think how do we convert these into conversations which are more compelling and interesting, right? So that's where I think our role really comes in.
Right. Coming from NPS, shifting a bit to the overall retirement planning issue that we are actually talking about, what would be your advice to young investors about retirement planning and, taking it seriously at an early age, perhaps?
Two words: start early, start small. It doesn't matter, right? More often than not, what I see is that people tend to get caught up in this thing about saying, I don't have enough money, how will I, 500 rupees is not going to make too much of a difference, and so on and so forth. My simple advice to them is that start the journey, right? The journey of 1,000 steps begins with the first step. I've said this before, and I repeat this every time I talk to young investors, is because if you make that first step, and I've seen this play out in cases of numerous young investors who took this advice and started the journey, and in 2 to 3 years they see and of course, fortunately, the markets have done well. It could go through different cycles, but I think when people see the kind of returns that they can make even by investing small amounts of money, and the fact that you're starting off on this journey, and at a later date you may probably choose to sort of hike up the amount of investment that you want to make. Start early. That's the only message that I would like to give. And the process is so friendly, right? I mean, the whole process of opening a permanent retirement account number, be it a corporate NPS account or a retail NPS account, it doesn't matter. Uh, it is a matter of maybe 5 to 7 minutes. And as long as if you have your CKYC number, then it's even more simpler. But practically every Indian has an Aadhaar number, right? And the Aadhaar enabled framework essentially makes sure that you're able to get your PRAN number within a matter of less than 6 to 7 minutes, right? So start early.
Yeah. So perhaps taking that strain of thought, NPS Vatsalya was introduced.
Oh, yes.
Do you think it, kind of redefines start early, or do you think
It
it should
does. It
continue?
certainly does. And in fact, Nidhi, interestingly, it's a very interesting question that you asked because we actually did this exercise where we said if somebody were to start investing on behalf of the child, right, at the age of, let's say, 5 or 6 or 7, and you created a corpus which is whatever is the corpus, right? So from the age of, let's say, 6 till 18, till the time the person attains majority, the child attains majority, you continue to, let's say, put in 50,000 rupees a year, right? By the way, as per the last budget, if you continue to be in the old tax regime, even the amount that is contributed by individuals on behalf for the in their children's Vatsalya account is eligible for the same 50,000 rupee benefit, right? It's under the same 50,000 rupee benefit, right? So it's so that that tax benefit is available. So there is parity now between Vatsalya and non-Vatsalya account contributions, right? The impact of having created a corpus that can be then bequeathed to the older me, to the older child, which is at the age of 18, it's sort of the ownership shifts to the PRAN, sort of becomes the major PRAN, and therefore only that individual can contribute to that account. Let's say that individual starts contributing from the age of 23 or 24 when the person starts generating a stream of income through salary or through other means, and then you sort of take it into 60, right? The difference between somebody who starts at the age of 23 and somebody who's, let's say, guardian or parent has started saving for them by putting in this 50,000, the impact is dramatic, right? It's as high as 3x. I don't remember the exact number. I would have come prepared because I don't recollect the number now, but I think the impact is as high as 3x. So nothing can. So it is actually almost, it's unbelievable. Sometimes the impact of these things can be truly so large that it's very difficult to put your head around some of these impact of long term compounding. Imagine if you're able to compound your money for 54 years,
Mm.
right? I mean, uh, that can give you mind-boggling returns, right? I mean, corpuses. Even at not so, even at 10% per annum, 9% per annum, it can, it can sort of create numbers which you wouldn't have thought of, right? So I think Vatsalya is certainly a step in the right direction. We've seen around 1.3 odd lakh Vatsalya accounts opened. I think that's the number that I recollect since September of last year, just about a year now. I think less than a year. And I do hope more and more Indians look at Vatsalya seriously. There is a lot of interest during our corporate interactions, during our retail interactions. We do see there's a lot of interest on Vatsalya and the impact of starting early, and therefore that's a fantastic vehicle to start your retirement savings early, even before you start earning money.
Definitely interesting. And, I would just wonder if at 18, I would see a corpus that is large. I would definitely get perhaps,
Tempted to take it away.
to continue something like that. But coming on a personal note, Sriram, you were mentioning that, now your middle name is NPS, since you talk about it and it's on your tips, and anybody having any questions about NPS, you would have an answer. In fact, a lot of things that I asked today were, just a matter of conversation. Do you invest in NPS yourself? And if yes, what is the proportion of NPS in your retirement portfolio?
Of course, absolutely. So, you have to practice what you preach. And as pension fund managers, it is absolutely our duty to demonstrate that, we are eating our own cooking in some sense. So I do have an allocation to NPS. My only regret is that I started that journey a little late, which is the reason why I'm all the more passionate about, nudging more and more people to start this journey early. So I do contribute my entire 14% of my basic Now I know that it sort of there's a limit of 7.5 lakhs and so on and so forth under 80CCD2, but that doesn't really bother me because the fact is that if I'm able to set aside 14% of my basic towards a vehicle like NPS and take advantage of the fact that I will get the entire corpus tax free. Of course, I'll need to buy 40% annuity with 40% of the corpus, but that doesn't really bother me at all because that's another fantastic product that I think people don't know enough about, don't give enough credit about. And there are some very interesting things that are happening in the annuity space as well. The regulators have been evaluating some very interesting inflation-linked, index-linked annuity options. And I am hopeful that in the next 12 months or so, we should see some of those products. So I think, yeah, so to answer your question, yes, I have my full 14% of my allocation that I can make to NPS goes into NPS without fail every single month.
Okay, that's great. And that is sure to inspire confidence among investors and viewers who are watching this program. On that note, we come to the end of this discussion, Sriram. It was a pleasure hosting you today, as always, and I hope to see you again.
Thank you very much, Nidhi. It's always a pleasure to talk to you, and I love the advocacy for NPS that you always bring about. Thank you very much for your time. Thank you.
Thanks a lot.
Insurance is the subject matter of the solicitation.